Greetings from the Charter School Office. I'm Albert Bertram, the Finance Specialist for the office. So this sheet here is a part of the annual report last year. So due to conflicting dates of the information being available, we took this piece out and separated it. So and instead of having those regional board trainings, we decided to have these videos. So we hope that you enjoy this instead of having to travel to a regional board training. So one of the benefits with this method is you get to see your actual school, and I'm not talking about the broad document. You're actually presented with your numbers and talking about your numbers. So we use this as a form of communication between myself and others in the office. This essentially summarizes the audit and then does a couple calculations, and then it has a couple other bit of information on it that I'll go through as we go through the sheet. So starting in the statement and deposition area, these are all derived from the audit. So I'll kind of show you where this is at. So as an example, look at total assets, which total assets are $841,984. So quickly we'll go to the audit. Here's a statement and deposition, and then you can see all the assets, and then here's total assets, $841,984. So if you wanted to come up and verify, or come here and verify the other numbers, you could do that. For time, we won't. We'll go back to our audit review sheet. So the ending net position is the June 30th, 2014 net position, and the previous net position is the June 30th, 2013 net position. So that's the difference between the assets and liabilities. So just so you know what that is. So we'll move down. Now, balance sheet current assets. This is a general fund current assets, and balance sheet general fund classifications, that's what these are over here. So I'll show you where these are at on the audit as well. So we'll go back to the audit. The balance sheet is 2 pages after the statement and deposition. So 1, 2. Here's balance sheet. Now it's important to note that this part of the review sheet is taking the general fund into consideration. So if you have a school service fund or a debt service fund or whatever, any other type of fund, this area is just dealing with just the general fund. So here's the assets. And if we scroll down, here's our fund classification. So committed, unassigned, and here's the amounts. So go back to the review sheet. Here's the assets, and then here's the fund balance classifications. Now, if you don't know what these mean, these definitions are directly in the audit, so you could find them pretty quickly in the audit. So committed fund balances are amounts constrained to specific purposes by the board. To be reported as committed, amounts cannot be used for another purpose unless the board takes action to remove or change the constraint. So that's what committed is. And unassigned are amounts that are available for any purpose. These amounts are reported only in the general fund. So it's important to note what these are. Again, if you don't know what they are, I won't go through the other ones, but if you don't know what they are, they're in the audit. So before we move down, we'll move up to the upper right hand corner. Here's the a quick snapshot of the general fund activity. So it takes the beginning general fund, the total revenues, total expenditures, other financing sources, the net change, and then the ending general fund balance. Now, the Charter School Office knows the agreement with NHA, and we take that in consideration for renewal and that kind of thing. But we still thought it was important to show you what everyone else is seeing and how this sheet is comprised. So underneath that, we have a couple calculations. So there's general fund balance, which is the ending general fund balance divided by total revenues. And then the same calculation is essentially below it, except it subtracts a restricted amount. So if there was a restricted fund balance down here, we would subtract that amount. There's not, which is why it's the same. And then general fund divided by expenditures takes the ending general fund divides by total expenditures. And the state, I believe, if on the governor's proposal on the last state aid update mentioned this specific formula. So the state looks at this one. We kind of look at the revenues one more so because expenditures could be skewed if there was a large capital outlay or something during a particular year. So it's important to look at both of these, which is why we have them both included on here. So again, the NHA agreement with some of our other schools, we look for this to trend upwards or downwards, but we take the NHA agreement in consideration for this one. So ending general fund balance divided by beginning general fund balance takes the ending general fund balance and divides it by the beginning general fund balance. If this is below 100%, there is a negative net change, which is the case here. If it's above 100%, there's a positive net change. So that's what that indicates. As we scroll down, these 4 boxes summarize the notes section of the audit. So on page 4 of this review sheet, I include the notes from the audit that are related to these points, but you could also find them in the audit if you wanted to go look them up. So this is just part of the template, but so this would be associated with the state aid note if the school ever borrowed the state aid note or other short-term borrowing. This is usually attributed to revenue bonds or any other type of bonds to finance a building. If a school doesn't utilize this method, then usually it is the leasing method. So that's what this River City Scholars utilizes, the leasing method. So that's what this is. And again, this is derived from the notes section of the audit. And over here we have the management fee section. So in most of the notes section of an audit for other schools that aren't using the NHA model, there's a specific expressly stated management fee listed in the audit. Since that isn't the case, I just put NA, and that's why these errors are coming up down here. I could put 0.01 or something, or 0.01 or whatever, and that would put these all zeros, but just to let you know that there's not an expressly stated amount, that's what's going on there. So that's why that's NA. So as we scroll down, here's our building square footage. If this is inaccurate, let us know, because it affects a couple of these calculations here. So we can update that, and these are all formulas, so they'll quickly update. So hopefully it's correct though. And then over here we have revenues per square foot, which takes the total revenues divided by that square footage, and then expenses per square foot takes the total expenditures divided by that square footage, and then payment per square foot actually takes the lease payment and divides that by the square footage. So the annual lease payment divides by that square footage. So for Bay Mills schools, if anyone was wondering, the average is not median. It's $14 for this one, and then operations and maintenance takes the line item of operations and maintenance, which I'll scroll down. So the line item of operations and maintenance, and then divides that by the total square footage. So these are just these aren't meant to be an indicator of either overspending or anything. It's just kind of an indicator to get an idea of what's going on. So just like ratios and finance, this is kind of a school type comparison. So so this number, the average was $18. So this is a little higher than the average for BMCC schools, but you know, whatever, that's just your information. So square footage divided by fall 2013 takes the total square footage and divides by the fall 2013 count, which is the corresponding count for this fiscal year. Now if we go down to the next page, general fund comparison, this takes the box on page 1 in the upper right hand corner and kind of breaks that out into more detail. So here's the June 30th 2014 actual, the June 30th 2013 actual, and then the difference. Now it's important thing to note here is if you look at this line item, private sources NHA, there's a contribution in 2013 of $2.7 million and then $716,000. So I thought it was important to note, if we go down to the note section real quick before we move along up there, here's a reference to what that means. So revenues private sources NHA represents a contribution granted by NHA for excess of academy expenditures over public revenues available. So we've seen this with several of our new NHA schools. The NHA puts money in as revenues and then starts to get a return on that over time. So that's an important thing to note from the board's perspective with the new school. So we wanted to point that out. Now, if you're wondering why some of these have these little numbers and some of them don't, if they weren't part of my original template, I had to copy and paste in from a previous one, and I didn't have the numbers on a previous one. But if you don't know what something is, like one of these line items, I'll show you a quick trick to look things up pretty quickly. So I took the accounting manual, put it in Microsoft Word, which I believe this is Word 2013, and then you come up to the upper right hand corner, or you can hold Control and push F, and then that'll give you this find bar over here. Make sure you're on results, and then type in what you're looking for. We'll use basic programs as an example. And as you click over here, this will actually move through the document and show you where it's at in the document. Now you can't use a broad search like instruction, it's in here too many times, but if you focus your search, you can find what you're looking for pretty easily. So basic programs, here's the accounting code 110. Basic programs are instructional activities including enrichment designed primarily to prepare pupils for activities as citizens, family members, and workers, as contrasted with programs designed to improve or overcome physical, mental, social, and or emotional handicaps. And it goes on to say it includes pre-kindergarten, and you could scroll down and see some of the other entries, sub-entries within that category. We won't get into that for time, but that's a pretty good tool to do that, to find things. So if you don't know what one of these things are, feel free to ask us, or if you can't figure it out at the school level, and we'll get it figured out. So this sheet will let you compare from year to year, so you can see the revenues from year to year, and then the expenditures down here. So that's that, and again, this should match up with the box in the upper right hand corner, the ending general fund balance. So this area, this is also from the audit. This is the original budget, the final budget, and the actual. And then this budget difference takes the difference between the actual and the final, and then the percent change is the percent change between the actual and the final. Now this note here is just stating that the original budget is due July 1, which is well before the corresponding count date. So in some of our other schools, there's a large discrepancy between the original budget and the final budget because of the count changing. So budgets need to be amended based on the count changing. So below that there's instruction as a percent of revenue. So newer schools, so that's why there's a 0 here. But I'll show you what this is a percentage of. So scroll back up here. That takes total instruction divided by total revenues. So you can compare that if you wanted. Now just know that revenues there was 2.7 million contribution and then 716,000. So that's going to change these numbers down here. So you just need to know what's impacting that. And then also a real life situation that could impact this is if a teacher was hired for or was getting paid $50,000 and he or she left the school, retired, resigned, whatever, and a new teacher was hired for $30,000, that would essentially lower the instruction expenditures while not necessarily providing less instruction. Now, I said this every time, we can't get into the argument of quality because this is dealing with the finance area, but as far as instruction, that's something that could impact this number, but not necessarily be a negative at the school level because there's not one less teacher. It's just the teacher's getting paid less. So just something to know. These aren't, so that example is just saying these aren't absolutes. Just know that they're an indicator and they're there to help ask thought-provoking questions. So that's that. And then over here we have revenues divided by fall 2013 and then expenditures divided by fall 2013. So it'd be interesting to see the trend in this from year to year. And then the difference, again, if there's a large capital outlay, that could skew this. And then that 7 last year's number could have been, the revenues could have been potentially skewed by this large revenue source from NHA. So just kind of know what's going on, and when you look at these indicators, they'll help you, assess that something's different from year to year. So enrollment numbers, the third page. These are enrollment. These are derived from CEPI, which I've tried to not use acronyms because there's so many in education. So CEPI stands for the Center for Educational Performance and Information. Now, if you wanted to find where these numbers are, you go down to My School Data. Here's all the spreadsheets, the student count, free and reduced lunch count, special education count. If you want any of that, it actually goes down to 91, 92. These are massive spreadsheets. So I've actually dug those out for you. Now the last one, if you notice I didn't highlight the last one. The last one is actually a number I received via Epicenter, which Epicenter is the program that transfers files from the school to the charter school office. And the form was the DS 4061 form. So this is an unaudited count, and that's subject to change. So if the audited number is different from the unaudited number, that could change from year to year, just so you know. And then over here we have a percent change calculation that takes calculates a percent change from count to count for our numbers people. And then below that we have a graphical display of the count data for our visual people. So that's what that is. And then we have, these are derived from CEPI. Well, these two, I guess, not the zeros, but these are derived from CEPI as well, right where I just showed you there. These are errors that say you can't divide by 0. So once these, over time, once these zeros are phased out, this will go away, just so you know what that is. And then this is the percent free and reduced lunch count. So this takes the free and reduced lunch count and divides it by the total fall count, and then that's where these percentages are calculated. So, and then below that we have our our graphical display of the 2 count dates. So again, over time that'll fill in. It'll be a little better to look at, but it's still good to look at now, seeing the increase, and you can see the increase up here too. So we'll move down. Page 4, this is the note section of the audit. So this is derived from the note section of the audit. So if you notice, there's page numbers listed. These are the page numbers from the audit. So this is not my words, these are from the audit. So anything associated with debt, which we classified as capital assets, and then the operating lease, we put in this box. So if you want to know about the operating lease and where the number came from for those boxes on page 1, those 4 boxes, well, 2 of them were blank, 3 of them were blank. This is where the lease information came from. So page 16 of the audit. Here's the management company information, which I've already pointed out, this private sources NHA information, and that's page 12 of the audit. And then there was no findings, which is good. I think out of our 42 charter schools that Bay Mills authorizes, there was only 8 findings, and 4 of them were from schools just being too small in size, that they had a lack of segregation of duties. So it's pretty good. Bay Mills schools have been doing pretty good as far as findings are concerned. And then over here, just a couple more notes that aren't associated with either debt or management, the management company. So here's just the charter expires 2020, that's from page 12, and then the decrease in that position, page 6. So this document is reviewed, and my contact information is albertb@bmcc.edu. If you have any questions, concerns, or comments, feel free to let us know, or you can tell your field rep, and hopefully he'll let us know. So we hope you enjoyed the video, and we thank you for all you do for the children of Michigan. Have a good one, take care, and stay warm. Bye.